Hey, welcome back to YT Finance, and today we are talking about Palantir Technologies PLTR stock and why the stock absolutely got decimated today after they released their earnings report, which I actually predicted in one of my previous Palantir videos. We're also going to do a quick stock market update and talk about Rivian and Twitter stock just for a little bit, but then we're going to go back and talk about Palantir Technologies, and we're going to go over their earnings report line by line to determine what their Q2 earnings report is going to be like, whether or not this decrease in the PLTR stock is justified or not, and what we as Palantir investors should do given the current circumstance of the overall market and Palantir stock as a whole. Then we're going to move on and talk about how although Palantir is tumbling right now, we do have good news from their CEO and other analysts that are currently looking at Palantir Technologies. Speaking of Palantir's CEO, Alex Karp actually released a letter to shareholders which I want to remind investors of because it's going to be extremely relevant for what we are seeing in the PLTR stock price. Then lastly, we're going to talk how Palantir's revenues literally could double, particularly referring to their commercial clients and their commercial business segment, which I also talked about in a previous video, and now we are actually going to see that happen from the mouth of the CEO himself. So for more Palantir news updates, remember to go and smash that like button right now and comment your thoughts down below about the PLTR stock absolutely crashing. Subscribe if you are new, and without further ado, let's jump right into today's stories. So the PLTR stock currently is trading for around $7.40. However, the most bullish high-end price prediction for the company for the next 12 months still currently sits at around $25. However, analysts could end up pushing this down and reevaluating their current PLTR stock price targets. Also, this CNBC article says that the current stock price has dropped by around 15%. Actually, it's more around 20% because the company is still falling at the time of this video. So if you didn't know, Palantir Technologies is a big data and analytics company that serves both commercial clients as well as government enterprises. And because they recently released their Q1 earnings report, the PLTR stock price has absolutely plummeted, which we will talk about later in this video. But just to give you a taste of what we are going to be talking about, basically on a non-GAAP basis, Palantir reported profits of 2 cents per share. However, they were projected to bring in around 4 cents per share. Also, their revenue was higher than expected. However, their government business actually had a decline in their overall revenue growth, which I said will continue to happen as their commercial clientele continues to increase and they start getting more revenues from their commercial segment. I've said that multiple times, so at least people who watch this channel should not be surprised by that. I also want to quickly touch on Rivian and Twitter, which are also very important because I've talked about both of these companies in the past. Rivian stock, ticker symbol RIVN, which is an electric vehicle manufacturer, their shares are also plummeting and they've lost around 15.6% of their overall value because Ford, who is a huge supporter of Rivian, is selling around 8 million of its 102 million share stake in the company because the lockup period for this is ending, which means that they can sell the stock. So that's why the RIVN stock is continuously falling. And then lastly, we're going to talk about Twitter, which is absolutely amazing because Elon Musk has actually released a detailed financial goal for Twitter to quintuple their overall revenues, which is absolutely insane. He plans to do this by 2028 because he's going to cut Twitter's reliance on their advertising revenues, and he wants to grow the company to around 931 million users by 2028. And this is also phenomenal because Elon Musk really is pushing the free speech agenda on Twitter, which we will actually talk about later when we talk about Alex Karp's letter to their shareholders regarding Palantir Technologies. So now let's focus more on Palantir Technologies to determine what actually happened and if this stock price decrease in Palantir Technologies is actually justified. So let's start off with their revenues. So for Q1 of 2022, Palantir Technologies grew their revenue by around 31% to around $446 million, and this is very good. Ideally, we would want to continuously see Palantir deliver revenue increases year over year of over 30%, so clearly they beat that by around 1%, so they had a revenues beat, which I predicted in the last video. Literally, for the past couple of quarters, Palantir 100% of the time has beaten their revenue guidance, and I said that would literally happen in the last Palantir video, and clearly we see that happened, so good on us. I also mentioned how they're going to continuously ramp up their commercial revenue, which grew by around 54% year over year, which again we predicted in a past video, so that's another check for Palantir Technologies because because this is overall really good news. Specifically, their US commercial revenue grew by around 136% year over year, which is extremely impressive. However, investors are emphasizing the fact that their government revenue only grew by around 16% year over year, which is poor. This does mean that their government side is declining, but like I said in previous videos, their commercial revenues are going to overtake their government revenues eventually, which will be the thing I believe that takes the company profitable in the long term. More good news is that their customer count grew by around 86% year over year, which is another checkmark. Clearly, the checkmarks either means that the company beat on this particular estimate or that it's just good news in general. An X next to it means that they underdelivered on that particular segment, or if you see a dash, it means it's neither good nor bad, it's just decent. Their cash from operations of $35 million, representing an 8% margin, is decent, and their adjusted free cash flow of $30 million, which represents a 7% margin, is also pretty decent. However, on a GAAP basis, they did have a diluted share loss of around 5 cents per share, and like we said earlier, on an adjusted earnings per share, they had 2 cents profit. However, that is not GAAP. I'm more focusing on generally accepted accounting principles to determine if this company is truly profitable or not. So overall, by no means was this a bad earnings report, and they are consistently and constantly increasing their revenues that they are generating from their commercial clients, which I have been saying for over the past year now. So what could we anticipate for quarter 2 of 2022? Well, we know that Palantir Technologies is going to bring in, or is projected to bring in, around $470 million worth of revenue, which is very good. They are continuously scaling their revenue upwards, and they could even get more deals because of current geopolitical events such as the war between Russia and Ukraine, because countries surrounding these other countries are increasing their spending and they want to have very secure technology and platforms that they're operating off of, and Palantir is one of the most secure platforms that you could use for big data and analytics. In the future, it's also projected to have an adjusted operating margin of 20%, and for the full year of 2022, they anticipate an adjusted operating margin of 27%, which is absolutely phenomenal. More good news is that management is standing by their projection of a 30% CAGR, or compounding annual growth rate, referring to their revenues from now until 2025. So clearly their revenues are going to continue to scale. So overall, this is still good news, and I would say this drop in the PLTR stock price is completely unjustified. But since it has dropped, this is not only going to make their ratios and their accounting ratios much more appealing to investors, it also makes the company a better buy in general. So if you are holding this company for the long term, or you haven't already invested into this company, this is going to be a fantastic opportunity for you to do so. However, on the other hand, if you are already overexposed to this company, you just got hit very hard. And like we said in the last video, I came out with a video that said that Palantir Technologies is doomed after their approaching earnings report. If you don't believe me, go back, watch that video, or at least look at the thumbnail and read the title. So if you are following this channel, this should not be a surprise to you. However, overall, it's a huge overreaction in the market. Now, Palantir clearly is more fairly valued right now because the Palantir stock price is falling, but if you overallocated more than 5% of your portfolio when the company was trading at over $20 per share, you would be extremely in the red right now, which is why I always preface to always make sure to do your own research and practice good risk management. And the way I do that is I don't overallocate myself to a single growth company, especially if it's a risky growth company, by not allocating more than 5% of my overall portfolio value, which means that if my portfolio, however, because the current stock market environment right now is very negative and we are seeing multiple indices downtrending right now, I would say investing into ETFs could be your best opportunity right now. Particularly, my favorite ETFs would be VOO, another one would be MTUM, and the last one, of course, is going to be QQQ. Those are the ETFs that you probably really want to focus on right now as the stock market falls, because these ETFs are going to be the ones that are going to drastically rebound once the market finds a bottom. I also want to say that analysts are currently predicting their second quarter revenues to come in at around $483.9 million, which is actually more than management's $470 million revenue prediction. And Palantir's COO, or Chief Operating Officer, said the war in Ukraine actually has had no incremental impact on their first quarter revenues. On the other hand, an RBC Capitalist analyst said that not getting immediate government business from the war and the conflict between Russia and Ukraine is not a good sign for the company right now. But nonetheless, overall, the overall earnings report was no way very negative, and this drop in price is completely unjustified, and again, it's due to macroeconomic factors, nothing is necessarily wrong within the company itself. Now, with that being said, I do want to highlight a few things that the CEO, who is Alex Karp, said to Palantir shareholders in a letter to shareholders. And he's basically saying that Palantir is reaching an inflection point, and that's exactly what we want to see. And he's also saying that they plan on doubling their commercial revenues this year, which I 100% agree that they can do, because I have literally predicted this over a year ago. So let's see what Alex Karp says. He opens the letter by saying, "The world significantly underestimates the threat of nuclear conflict in Eastern Europe. The understandable desire to intervene must be targeted and strategic, balanced against the risk of further escalation." So clearly he's talking about the conflict between Russia and Ukraine, and he added that bad times are actually good for Palantir Technologies, which you should have actually heard that quote before, because Alex Karp has said that a few times. Alex Karp is also concerned that the genuine discourse, or the agreeing to disagree, or even the exchanging of ideas is under attack in America due to lack of free speech. He goes on to say that many technology companies are focusing on the metaverse right now, but this is not going to protect the country. Just listen to this. This article quotes, and it says that Karp took issue with Silicon Valley focusing on the metaverse, which he said was a distraction from the very real conflicts that we collectively face. He goes on to say that such escapism is of no interest to us. We at Palantir do not operate in the metaverse. There are enough challenges to address in this one. The CEO also remains very optimistic that Palantir Technologies and their PLTR stock will rebound in this year, which is absolutely phenomenal news. And he says that Palantir is set to double for the third year in a row their commercial revenues. And he says that alone their commercial revenues for the year could bring in around $400 million, which is extremely impressive, and they are rapidly growing their commercial segment. However, on their federal government side, they have landed deals with the Centers for Disease Control and Prevention, as well as the Department of Health and Human Services. Lastly, Alex Karp says that this is our moment. Our business is a rare amalgam from an investing perspective that blends aspects of both value and growth. So he's calling Palantir Technologies a value and growth company. Due to the stock falling so much in price, this company is now an extreme value, and it's also a fantastic growth stock. But he goes on, he says, "We combined the resilience of the defense industrial sector with the growth of a software company," and he is 100% exactly right in that particular statement, which is why multiple investors and analysts, including myself, really like and enjoy Palantir Technologies for a long-term hold. Clearly, I'm not going to sell any Palantir Technologies because I am not overexposed to the company, so I could literally sweat this out. Even if the company dropped to $2 per share, I still wouldn't sell my stock. The reason being is that I'm not overexposed to this company, which means that I can hold it for the long term, and it's not going to affect my overall long-term bullish thesis on the company. Now, the only problem that I do see with this statement is, compared it to other government contractors, they do not typically trade at around 57 times their forward earnings, such as Palantir is doing according to their last 3 months before this recent slide today. So honestly, this slide in price has now made Palantir a value play of sorts, and it's also a fantastic growth play because they are growing their revenues by around a 30% CAGR until 2025. So we get the best of both worlds here. The more the PLTR stock price drops, it becomes a better value play, and it provides more growth opportunity for the future. But as always, remember to not overexpose yourself to one single company. Be well diversified, balance your risk correctly, always make sure to do your own research. Remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and I will see you in the next YT video.